Oil prices have declined slightly despite an announcement by the global cartel that it's trimming output next month. The alliance OPEC Plus, led by Saudi Arabia, says it's cutting production levels by 100,000 barrels a day in October. It's the first reduction in more than a year and reverses an increase that was announced at their last meeting. The international crude benchmark Brent dipped 0.7% to settle at around $95 a barrel. Oil prices have fallen 25% since June, as inflation weighs on major economies and due to lockdowns in China. Meanwhile, the European Union is moving to address its own energy crunch with a proposed cap on the price of gas from Russia, its leading supplier. That's in response to Moscow's decision to shut down the key Nord Stream pipeline to Germany.
If the European Commission was to propose a cap on the price of gas bought via pipeline from Russia, France would back such a measure, which would be coherent with our sanctions policy. Prices on the European market should be formulated in a more coherent manner and in connection to production costs.
For more, let's go to Craig Erlam, Senior Market Analyst at OANDA in London. Welcome back to the program, Craig. Can you tell us, please, about this decision by OPEC Plus and what else is the group signaling for the coming months?
Well, I think first and foremost, this is more of a symbolic move than it is a fundamental one. This doesn't really change the dynamics in the market, but what it does do is it sends a message to people in the markets that if they are going to continue to drive the price lower, then the group will not hesitate to jump in and cut production once more in order to boost prices. Previously, the group has suggested that they're not interested in prices, they're interested in the fundamentals, the dynamics in the market and the differences between supply and demand, but that's clearly not quite the case anymore. And this symbolic gesture is telling the markets, if you want to sell, then we will cut. And not only will we do that, but we won't wait for predetermined meetings. The next meeting is on the 5th of October, but they have left the door open to emergency meetings if the volatility continues in the market. So the message was loud and clear. They will cut if they have to.
All right, so a symbolic gesture, but what will have a material effect on oil markets is the possibility of a nuclear deal with Iran, which would unlock a significant amount of the country's own production capabilities. Can you tell us what kind of impact that would have on oil prices?
So this has been one of the driving forces between the price of crude actually falling over the last month or so. That and the dimming global economic outlook have both driven the price lower. But again, what the group has alluded to here, the OPEC Plus alliance has alluded to here, is the fact that if the fundamentals change, then they will change as well. So reportedly, Iran could potentially bring around 1 million barrels a day back to the market over the relatively short term. But if this is going to be offset by cuts by the OPEC Plus alliance, then that doesn't really boost the market at all. And I think that's the message, again, that Saudi Arabia and the rest of the alliance is trying to send to the markets. It's if the fundamentals move in an unfavorable way, then we'll move. And either way, the price should stay at a level that we want it to stay at. Whether that is an Iran nuclear deal, which is looking increasingly difficult to obtain, or if it is the dimming global economic outlook, which means lower demand growth, then the group will respond. The important thing for the group now is to maintain these higher prices.
All right, Craig Erlam, Senior Market Analyst at OANDA in London. Thank you for joining the program.
Thank you.